Hello, wonderful people. Good morning, good day, good evening. Depending on the time you're catching my broadcasts, it's Pedro again, and I've been a little bit busy of late, and I have been having a little bit of technical challenges, and which I've tried as much as possible to resolve, and as a result, I've not been able to come on board like this as usual to drop educate you as to the current happenings in the marketplace, and I really apologize for that, and I hope not to repeat this again. So I'll be jumping straight to a lot has happened within the past 1 month or so since my last broadcast in June last month. This is gonna be like my first broadcast for this month, so I'll be jumping straight into action. And a lot has happened. A lot has been happening in the marketplace. The cryptocurrency market has practically been dead over the past 1 month or so. We are looking at exactly 1 month. Actually, in the exactly 1 month since the last swing low, the last crash, to where we touched. Well, actually, in the week, where we touched 17,622, which has been latest low ever since, at least from the Bitcoin perspective. We're exactly 1 month into that week. That was the week of 13th to 20th June, and today is exactly 20th July. So we're looking at 1 month since the week of that crash, and ever since, the market has, as usual, been in a choppy state, in a consolidatory mode, if you must put it that way. I prefer to use choppy in this case. Choppy, like I've said before, is a little bit an element, a tiny aspect, a small hierarchy of consolidation. So as you can see, this is a little bit of movement here as compared to the last choppy state of the market, but we're currently there, and we've spent we're looking at just over a month now. Ever since 18th, today is 20th, we're looking at over a month and still counting. We're still within that territory of the consolidation. So looking at the recent trends in the market, since the underlying trend is still, you need to understand that the underlying trend in the market is still a downtrend. No doubt about that, and the market seems to be respecting that. In the sense that after every extended period of consolidation or choppiness from the market, we tend to head further down south, which is in the direction of the underlying trend, and the tendency of that happening right now is still more because the trend is still definitely a downtrend. Nevertheless, it's been a little bit of development which I would like to point out to you right now from the marketplace. Number one, one of the major points I need to make clear to you today is the fact that the Bitcoin is near the worst case scenario. Let me put it that way. I won't just say seeing Bitcoin in near low points is it has a little bit of ambiguity. So I'm going to be telling you exactly what I see happening in the market right now. I'm going to be very, very logical. I'm going to be straight to the point, and it's going to be very, very simple to understand. It's simple logic. is just based on the fact that, looking at the numbers, Bitcoin, the worst case scenario for Bitcoin is for Bitcoin and the entire crypto market to crash to zero. Now, looking at where we are very close to that worst case scenario. That means that is the bottom, that is the bottomless, the point of no return, no point of no, that's the end, basically the end, the bottomless pit, the end point, for Bitcoin going further down south. The end point is for it to go to zero. We're not looking at negative Bitcoin. That is more or less not realistic. Okay, we're looking at the fact that Bitcoin, the worst case scenario is for Bitcoin to head down to zero, which means it has no value. And we're looking at the fact that Bitcoin is very close to that point. That means there is more room for Bitcoin to go up at this very point than it is to go down. So it's simple logic. Bitcoin at 70k looked like it had more room going down than it had going up. Why? Because 70k was an all-time high, or 69k was an all-time high. That was the actual figure, 69k, roughly 70k was an all-time high. That means that is the highest point we've ever reached to the upside. That means calling ridiculous target for Bitcoin of hundreds of thousands was more like living in a dreamland, Alice in Wonderland, living in Wonderland. But there was more room to head further down south at 70k, which is an all-time high. So at this point, the reverse is now the case. That means we are closer to the bottom than we are to the top. So that means we have little room to the downside. Bitcoin between 20k or 20 something k, let's say at 20k to zero, the worst case scenario for Bitcoin is to lose 100%. Okay, it is a simple logic, simple mathematics, simple arithmetic. Bitcoin loses from 20k to zero is 100% loss. But Bitcoin moving to 40k is 100% gain. Bitcoin moving to 60k is we're looking at 200% gain. Bitcoin moving to 70k or 69k, which was the previous which is the current all-time high, is a 245% gain. So is that possible? Yes, because these are territories we have visited before. So that is very, very realistic for Bitcoin, and I'm not going to go beyond that point. Why? Because that is that is the only area I can vouch for Bitcoin. I cannot start calling targets we've not been to before. Those are unfamiliar territories. Okay, so I will only talk based on where we have visited. I cannot start talking based on what we have not, Bitcoin is yet to achieve. So based on what's on ground now, Bitcoin has more room to grow up than to head further down south. So at this point, it's a simple concept of trading in which you need to buy at support and sell at resistance. It's this Bitcoin nearing the bottomless pit, the end bottom point, means that we are at a very, very critical support. It places Bitcoin at a very critical support. So at this point, buying at this point makes more logical sense than selling at this point, and it's easier for you, most especially if you are a hodler or an investor in this game. It means all you need to do is to think of, at this point, I'm a hodler at this point. This is not financial advice, but as a hodler at this point, I'd rather be buying Bitcoin than selling. And if it heads further down south from this point, I'll just DCA, dollar cost average, my position. It's easier for me as an investor or as a hodler, a long time player in the game, than a guy who is just into trading and trade out, a short-term trader. Because short-term trading, it's a little bit tricky at this point, because you can easily get stopped out, which is basically what the market has been doing for the past 1 month, that we've been stuck in this consolidation or choppy states. So Bitcoin has more room going up than it has going down. So irrespective of the fact that yes, we are in a downtrend, this is one point that people are failing to realize, that it can go either ways. The tendency for it to go head further down south is more. Why? Because the underlying trend is a downtrend, and given recent price action that we've had from April to May and from May to June, we've had extended periods of consolidation or choppiness from the markets, followed by this, followed by a breakout of consolidation to the downside. We've had this again here in June, between May and June, and the pattern is usually it takes 4 weeks for Bitcoin to do this and break out to the downside. It did this twice. Oh Jesus, sorry. Okay, so the pattern is usually 4 weeks thereabout, and then after a crash, 4 weeks, you count 4 weeks, and then we have that break, which results to a crash again further down to the south side. So we had this in last year May. We had this in between May and June. We crashed to 30k up territory. We consolidated for 4 weeks, 1, 2, 3. On the 4th week, there was this breakout to the downside. We crashed down to 17.6, and usually 4 weeks, 1, 2, 3, and 4. So the 4th week, which was like last week, we're supposed to see what looks to be like the point, the period where we usually get to break out to the downside, but this hasn't been the case, and I'll be showing you why this particular case is unique. The particular case is unique. Nothing is 100% guaranteed, but here is why this particular case is unique. Now, there's been what I refer to as a wash and rinse operation going on in the market at the moment, and I'm going to be using the Binance platform to illustrate this current scenario from the market. We've had the last 2 weeks close with the highest back-to-back volumes I can ever in the history of or maybe the second highest back-to-back volumes in the history of Bitcoin trading on at least the Binance platform perspective, and let's say the highest in over 2 years, ever since March 2020. And normally you would expect that given the current trend from the market, you would expect that this huge ton of volume would result to a huge sell-off, that is a break from consolidation to the downside. But this hasn't been the case. This hasn't been the case, and this is why this particular consolidation seems to be very special and having a ton of bullish attribute to it, in as much as this is not 100% certain, but nothing is 100% certain, but currently we have seen some unique signs, something unique, something different from the recent consolidation patterns we've been experiencing in the market. We had 1 million plus Bitcoin traded in the last two weeks. Last week we had over 1 million as well traded, and we ended the week on a doji. A doji means this is usually a sign of exhaustion, most especially when it comes from big time frames like the weekly, and you can see that this is a clear sign of exhaustion, because ordinarily, given the current recent patterns from the markets, you would expect that this huge ton of volume will result to a huge sell-off to the downside, but unfortunately it resulted in a doji, which is a sign of exhaustion from the bears, in my opinion, and also a sign of indecision as well from the entirety of the marketplace. That is what the doji signifies by default, and you can see clearly that this week's current price action as it stands now is a clear indication of exhaustion from the marketplace as a result of the doji formed from the close of last week. You can see that we're currently experiencing serious buying bullish momentum from the market as things stand, and so what's my take from all these price actions so far is that nothing is concrete, nothing is certain, nothing is 100% certain as it stands now, because we're just midway into the new week, or we're barely midway into the new week. We still have about 4 days or so to the close of the week, so that is a very long time. So we're not even up to 50% in this week, but so far so good. The market seems to be showing responding well to the doji that was formed from the close of last week. So the close, that means this week is highly critical. The close of this week is highly critical. The way the market is operating at the moment, a daily close is not enough to determine where the market is going to be, where we're likely going to be headed. Weekly closes have been very pivotal as to how the market as to the direction of the market in recent times, and so this week is not going to be any different. We're going to have the close of this week is going to be very pivotal. We're roughly less than 50% into this week already, and we're already seeing over 50%. So a large ton of volume, the largest the last 2 weeks closed with the largest volume, back-to-back volumes from the markets we've seen in over 2 years, and yet in a downtrend, and we're unable to push further down south. That means it's a clear indication of exhaustion from the market, and we're clearly seeing the market respond in like manner for this week. So, but it is still too early to tell, like I was saying, and to make a decision as to where the market could be headed. So the weekly, like I was saying earlier on, a weekly close is very pivotal as to tell us where the market will be heading, likely heading. So this week is going to be very pivotal. we're looking at we're barely 50% into the new week, and to the close of the new week, and we're already seeing a volume that is over 50% that of last week. So we're likely going to see the week close with higher volume. That means higher intent from either buyers or sellers. So the candle close, the price action is going to really complement this volume, and let us know if the bulls are actually very serious. We're going to see a very serious, convincing bullish close, like a bullish, strong bullish engulfing from the markets, accompanied by bullish serious volume, higher volume relative to last week. Then we may be seeing some sort of relief from the market, even if not a trend reversal, but maybe just maybe a serious relief from the market. And as usual, I'll be showing you how the DXY is performing, because as like I've always said, over the past months, since last year or the beginning of this year or so, I've always used the DXY, because the DXY is very crucial as to how the cryptocurrency market and other financial asset markets, it plays a very key role as to how these other markets are going to behave. And I've always said I was bullish on cryptos and other forex related pairs if the pattern, this 5-year pattern, still stays intact, and until this pattern gets invalidated, I would still remain bullish, and that will signify weakness from the US dollar. Well, that has been the case until last month. When Bitcoin, the 18th, when Bitcoin crashed down to 17,622, that same day signified a close, an invalidation of that pattern. You can see clearly that you can see that this is exactly the same week, that same day. This is the 17th. The 17th or so was the week that signified was the day that we had this close above this horizontal level. So Bitcoin, the dollar, the US dollar, has been massively bullish within the past 1 month or so, and as a result, cryptos and forex related pairs like the euro US dollar have been massively bearish. As a result, you can see the euro USD has been bearish. As a result, the GBP USD has been bearish as well, and so has been bearish as well. You can see massive sell-off from the GBP USD as well. So the DXY holds the key to a very significant move from the Bitcoin market and the cryptocurrency and the forex related pairs as well. So in my opinion, you can see that the DXY seemed to be weak for just a very short moment, and forex related pairs rallied. The likes of USD CHF rallied so well during that period, and you can see this massive sell-off from the USD CHF, and the movement from the 17th when we saw this little bit of indecision and choppiness from the DXY, exhaustion from the DXY. USD CHF responded in like manner. You can see the size of the candles began to reduce, and DXY USD CHF lost its strength over the USD for a while. That's the big DXY has been bullish. So this current weakness from the DXY should not be mistaken for overall weakness. This is another sign of a correction that has been the case from the DXY until we start seeing the DXY close below this line, this level. This level is very, very critical, which has been the level, the pattern that we have been singing about for the past couple of months, that this is the pattern, this is the level that holds the key as to a very, very big serious weakness from the DXY, which would signify strength from the from the Bitcoin and forex related pairs, until we start seeing the US DXY close below this level. Otherwise, whatever happens here would be more like a correction, to be more like just a major correction from the DXY, and until we start seeing weekly, daily, weekly closes, most especially, at least, and monthly closes below this level. This level holds the key. It's a very, very crucial level for the DXY to ensure that we see serious, massive strength for the Bitcoin and other crypto-related pairs in the form of even trend reversals. We need to see DXY close below this level on at least weekly and monthly closing basis to see Bitcoin and forex related pairs reverse trend and even rally, have major rallies to the upside. So I'll be closing this session today with what I feel, where I'll be looking at buying opportunities for the likes of gold. Here's where I'll be looking at buying opportunities for the likes of gold. Gold has been stuck in a consolidatory pattern, achieved an all-time high in August 2020, 27.5, and you can see that on the big time frame, monthly time frame, we have just been stuck in this consolidation. We have just been stuck. We've not been able to break above that all-time high and form a new all-time high. So the market has been stuck within the past 2 years within this box, this consolidation. We revisited this point in March, and but we were unable to break through. You can see there was a massive reaction from the markets. You can see a massive bearish pin bar on even the monthly time frame, and you can see a massive sell-off as a result. So this is where I'll be looking for, and we're headed down to the bottom of this consolidation, and this is coming at around this point, and we're very close to that point. I'll be looking for buying opportunities when we get down to about 1675 for gold. The price action there will determine if I'll be looking for buying opportunities or more selling opportunities, but that is where I will be looking for buying opportunities for gold. So that is for gold, and basically that is it from me for this broadcast today. I hope you enjoyed it, and I hope you got value, and if you did, please let me know in the comment section, and then feel free to like, share and subscribe. And always remember that this is for educational purpose and not to be treated as financial advice. Financial assets trading is a risky affair, so always endeavor to carry out your own research before entering any trade. Do have a lovely trading week ahead. So just before you go, a recap of what today's broadcast is all about. Down to the fact that we are seeing a deviation to the pattern, the consolidation, and the further crash of the Bitcoin market. We're seeing something unique happening to that pattern. We're seeing a slight change to that pattern, which is looking more like a bullish signs of bullish momentum from the market. And then this week is going to be a very decisive week. The close of this week is going to be very decisive as to if we may likely see a serious relief from the market. This is as a result of the last two huge weekly closes in volume that we've experienced from the market, that the market has failed to capitalize on and crashed further down south. So more of the opinion that we may be seeing a likely bounce as a result of this failed this inability of the market to head further downside, in spite of having this huge over 2 million Bitcoin weekly closes in the last 2 weeks. This is a clear sign of exhaustion, and as it is with the pattern, where we likely normally see a close of a breakout of consolidation to the downside, we're seeing a breakout, like a likely breakout to the upside. But this week's close, the week's close, would be very pivotal as to confirm that breakout to the upside. And I made mention of the fact that for Bitcoin and other forex related pairs to see serious reaction, even as to serious movement to the upside to the point of trend reversals, we need to see DXY weaken to the point of at least a weekly close below this horizontal level. That has been very pivotal, a pattern that has been very pivotal over the past 5 years. DXY stays above this level, then it means it's still bullish, and then that means Bitcoin and other forex related pairs are still gonna suffer, at least for the interim, until we start seeing a close below this level, and it's been converted from support to resistance before we can begin to see a serious strength from Bitcoin and other forex related pairs. But once this level still holds as support, it means strength for DXY and weakness for other assets. So thank you very much. I wish you a lovely trading week ahead. Bye bye.